Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Ritu Singh. These are the top headlines from the startup space. Lighthouse Funds has invested 300 crore rupees in Nest Manufacturers, a construction technology company. The investment will enable Nest to deepen its R&D efforts, expand manufacturing capabilities and integrate backwards.
Piston, a cardless payments platform, has raised $6.1 million in seed funding round led by Spark Capital with participation from Pair VC and Bond. Piston will use the capital to scale go-to-market operations and expand its network of independent gas stations and commercial fleet partners.
Credgenic, SaaS-based debt collections and resolution platform, has announced a 40% growth in annual revenue with a total revenue of 220 crore rupees for FY24. The company clocked a profit before tax of 25 crore rupees.
Artha Bharat Investment Managers IFSC LLP, a fund management entity operating from GIFT City, has launched a hedge fund aimed at providing NRIs, OCIs, PIOs and foreign investors with structured exposure to US equity markets. The Artha Global Multiplier Fund will invest in 6 key US market sectors, including technology, retail, artificial intelligence and financial services.
Meta Platforms has agreed to take a 49% stake in artificial intelligence startup Scale AI for $14.8 billion, the information reported. The deal, which has not been finalized yet, appears to be beneficial for Scale AI's investors, including Axel, Index Ventures, Founders Fund and Green Oaks, as well as its current and former employees, the report said. Well, those were the top headlines from the startup world. On what's brewing today, MSME-focused digital lending platform Flexi Loans has raised 375 crore rupees in its Series C funding round. Now, this follows a 290 crore rupees infusion in September 2024, taking the total funds raised to 665 crore rupees over the last 6 months. Led by existing global and domestic investors, Fundamentum, Axion Digital Transformation, Nuveen Major Invest, the round saw a new backer, British International Investment. The funding includes both primary equity to drive operational expansion and secondary transactions to provide liquidity to early investors. To unpack what this means for the company's next phase of growth, I'm now joined by Deepak Jain, the co-founder of Flexiloans. Deepak, welcome back to Startup Street. What does this fresh capital unlock for Flexiloans, both strategically and operationally? And what was the rationale behind offering early liquidity through secondary transactions at this stage?
Thank you, Shruti, for having us back on the Startup Street. It's always a pleasure coming on this platform. Raising funds in the current set of markets and environment and getting interest from very, very large private equity funds name, including some of the backers who invested in us in September 24 as well, means a lot. And thus, it shows that there is strong interest in Flexi Loans and in good startups which are doing well. This funds will help us grow further, as I mentioned during the September meeting as well, that these funds will help us grow further from here. Take our plans of FY26. We are targeting to scale our AUM anywhere between 4,000 to 5,000 odd crores in next 12 to 18 months, and these funds will allow us to scale that. Also, right, in this round, we are welcoming BII, British International Investment, on our platform. It's UK's endowment fund. It's a very large private equity name, and this round allowed us to do that. Why do secondary at this stage? See, so this it's the current round is a mix of primary and secondary, and this allows us to give exit to some of the early backers who came in Flexi Loans 5 to 7 years back. So it's important that
and what kind of returns are they getting?
Yeah, as a startup, if you take money from HNIs and early investors, it's always good to give them an exit at a certain pace.
And what returns are you giving them?
It's very good returns. They're sitting on very strong mark to market. So it's a partial exit. It's not a full exit. So from here to whenever we go public, that'll be fantastic for them.
All right, so those are partial exits that we're talking about. But Deepak, Flexi Loans has disbursed over 10,000 crore rupees with 0 branches. What's the next frontier for product innovation and tech-led distribution? Are there new credit products or financial solutions on the anvil for the underserved MSMEs?
Yeah, so the focus or the center of focus for Flexi Loans have always been small traders, retailers, and wholesalers. We believe that we've stayed true to our mission since we started this company in FY16, and we've gone into the real hinterlands of India, or as we call it, Bharat. And we've disbursed roughly 75% of our loans in tier 2, 3, 4, 5 towns. The next focus for us is, to go really hyper local, understand some of the regions, geographies, sectors to the granular level, and customize our offering for these MSMEs. So that'll be the next focus as we scale, and thus obviously launching more products. So today we have two products which are fairly scaled up. We have an EMI based loan, or a term loan as we call it, and we have a vendor financing or a supply chain financing solution. We'll be further expanding on supply chain financing by offering short term working capital loans, or basically dealer financing kind of products to these MSMEs, as well as offering some other products like secured financing and other secured,
Sure.
be it or other security options. On
Okay.
that, we would also want to offer some other financial services to these MSMEs, at next 12 to 18 months.
Sure. Deepak, Flexi Loans runs on a 100% digital sourcing model, like I mentioned earlier. How are you using alternate data or AI to underwrite risk for thin file borrowers? And how do you ensure fraud prevention and data security while scaling in underserved regions?
So as you go to tier 2, 3, 4 towns, Shruti, most of the files may not be as thick in their banking and other things. So thus we use a lot of alternate data, their purchase data, the data from a lot of data variables come from the bureau side. A lot of data. We are one of the largest ecosystem embedded financiers in the country, and I had mentioned this earlier on in this show as well. So almost every large ecosystem in the country which is enabling MSME commerce or MSME payments, we have partnered with them to provide loans to the MSMEs, through that, and thus a lot of data comes from that. Now, when you have so many thousands of data variables, right, that's when your models become really complex, and that's when AI and machine learning helps you create and improve your models year on year. Our models have proven really well over the last 4 or 5 years. Especially, we've gone through 2 or 3 cycles, and thus when your credit costs are proven across cycles, that's when you think that or you start believing in your models even more and start increasing your growth targets. So that's what we've done. AI is helping us a lot there. Not only that, we are having many other use cases for AI. So be it calling, be it processing, every part of a process, we have put an AI agent now. Shruti.
Sure. We've completely run out of time. And on that note, we'll have to wrap up this conversation. But Deepak, many thanks for joining us today on Startup Street, and wish you the very best for all your growth plans.
Absolutely. Thank you, Shruti, for having us.
Well, in what else is brewing today? Y Combinator-backed API banking platform Decentro has closed a 30 crore Series B funding round that was led by InfoEdge Ventures. It will also be reversing its parent entity's location from Singapore back to India in the next 12 to 18 months. Now, founded in 2020, Decentro offers payment aggregator, KYC, data intelligence, and debt collection services to more than 1,300 companies, and that includes your NBFCs, fintechs, digital lenders, and banks. For more on their plans ahead, let me invite Rohit Taneja, who is the co-founder and CEO of Decentro. Rohit, welcome to Startup Street. Let's start with the decision to flip back from Singapore to India. It seems to be becoming the traditional startup playbook, really. What's driving the reversal, and how do you see the regulatory environment here supporting a move like this right now?
No, thank you for having me here. You're right, absolutely. I think in the last almost 1 year, more than that, actually, 1 to 2 years, you've seen like a wave of companies, just flipping back from US to India or Singapore to India. And I think it's a good trend in general. I'm pretty sure most of the people who are founders in those companies are happy with that, because ultimately this is where we see a lot of public market returns and the next set of investors coming in from. I think the regulatory environment is also very helpful, obviously from a public market perspective. We see much more exits coming out. We see a lot of more opportunities on M&A as well, and domestic investors getting really savvy, both retail and domestic institutional investors. I think that's really what's driving us, and probably the rest of the market as well.
Well, but if I may ask you, it's very early. I know you're going to still take some more time, but what is the estimated cost of this flipping? Because we've been listening to some big numbers, whether that is PhonePe or Razorpay that have recently done it. PhonePe, had to shell out as much as $1 billion. What is the cost you're estimating, and what is the timeline you're looking at? Yeah,
so that's where things get interesting. What happens is, if you look at the US to India flip, you actually have to pay a lot of tax. There's no way to avoid that tax. Interestingly, in our case, we are Singapore domiciled from an HQ perspective, and Singapore has a zero tax option, where you don't have to pay a tax at all. And in fact, if you look at Pine Labs, that is the best example. So Pine Labs had to pay zero tax, and they're still, of course, I think 75% through in the process, but should be completing the remaining 25% very soon. So we're following in their footsteps. So in our case, we actually estimate zero tax, in a good scenario. There obviously will be administrative and legal costs, those will be there. Early to estimate those, but yeah, tax-wise, we're good.
Okay, well, let's get to that 30 crore Series B funding round. Then, what is the capital for? How do you plan to deploy it?
Yeah, sure, absolutely. So we recently started targeting a lot of enterprises. I think if you look at the logos as well on the website, we've had a lot of early stage to mid stage, and late stage startups, right, both across India and global. And recently we have started noticing a wave of NBFCs, banks, large scale NBFCs and banks really coming to us, both inbound as well as outbound efforts. And I think that requires a slightly different cadence in terms of the enterprise cycles, the compliance required, the product involvement, tech involvement. And so most of this is really going towards that.
All right. You also, claim to be a profitable entity. But what are the numbers? Give us a sense of where your top line is, where your bottom line is, and what sort of target you have, say, for the next 2-3 years in terms of growth.
Sure, absolutely. So I won't share the absolute numbers, but I can definitely tell you we are in the mid-range of, I would say, double-digit CRs. So you can estimate, I would say, 3x growth once we officially report the numbers of FY25. FY26, we're looking at, again, similar 2x to 3x growth, I would say. And with roughly 60 to 70% gross margins. That's the usual range that we're looking.
And what will be the growth driver for this 2x and 3x kind of growth that you're talking about? Oh. Which part of the business?
Yeah, absolutely. Interestingly, there will be two major lines that are really helping us. I think one is payments itself. So payments is, of course, one of our top most revenue driver. It currently contributes close to around 70-75% of our revenue. We estimate that to continue to contribute at least 60%, somewhere to that scale. So just doubling down on the existing payment volumes, existing customers, increasing their payment volumes. That's one. The second one is from these new enterprise logos. So the ones I mentioned, the large banks, large NBFCs going forward. There we essentially will be selling a couple of new modules on the KYC and debt collection side. So we have something called Scanner, I think, which we were showcasing a while back, which essentially allows a lot of these lenders to really profile users, in terms of fraud prevention. So they're able to go into much details of the user's profile, digital profile, their device intelligence, etc. Very interesting product for them.
Yeah.
And the second is, of course, your loan collections. This is an inorganic opportunity. We actually acquired a small company 2-3 years ago, close to, I think, 2.5 years ago. And there we have launched a full-fledged AI voice bot that is able to do loan collections for you and able to replace the human caller. So, yeah.
All right. Finally, let me ask you, you're dabbling in multiple things. You got that payment aggregator license. You're doing debt collections for banks and NBFCs, KYC and data intelligence and so on. Is there any other adjacent, more lucrative products you're looking at adding to your bouquet of services?
Not at the moment. I think these products will keep us, quite busy for a while. So I don't think we intend to shift away from, the existing set of products. But just doing a lot of upsell and cross-sell, and you can see a lot of these have common customer cohorts like fintechs, NBFCs, banks. They come across all these entire cohorts end to end. And yeah, so I think we see a lot of upsell, cross-sell in that. I think that's really going to be one of the key focus areas.
Well, Rohit, we'll leave it at that. Thank you so much for your time here today. It was a pleasure speaking with you.
Thank you. Thank you so much.
Well, on that note, it's time for us to head into a short break. But coming up next, global consumer internet group Prosus is betting on India's women-led startups with its inaugural Tech FoundHER challenge. Prajna Khanna, the Vice President Prosus, joins us to decode this initiative. Stay tuned. Welcome back to Startup Street. Now, despite a booming startup ecosystem, women-led ventures still receive less than 3% of total venture capital funding in India. Global consumer internet group Prosus is looking to change that. Its inaugural Tech FoundHER Challenge awarded $100,000 in equity-free capital to 4 high-potential women-led startups across sectors like emotion AI, sexual wellness, and climate tech. To talk about the mission, the momentum, and what's next, I'm joined by Prajna Khanna, the Vice President and Global Head of Sustainability at Prosus. Also with me, my colleague Ritu. Prajna, welcome to Startup Street. And let's start with the big picture. What motivated Prosus to launch the Tech Founder Challenge? And how does it, tie into your broader sustainability or inclusion goals? And could this evolve into an annual initiative, possibly even expanding across geographies or sectors?
Hi, yes, thank you first of all for having me, Ritu and Shruti. It's a pleasure to be on an all-women screen over here. Rather than the big picture, we started with the picture for ourselves. Last December, we were looking at our portfolio and I had an epiphany, and I was talking to our CIO then and our CEO of Ventures and also our CEO in India, Ashutosh, and said, how do we not have many women-led startups in our portfolio? We're very actively looking at investable startups, opportunities, and there seems to be a very, very big gaping gap over there. So we just started with trying to solve or try to understand for ourselves what was going on. There is, whether is it our own processes, is it our own venture teams, or is it just not the lack of an ecosystem of women-led investable businesses? It was a question in true startup ethos, that's the question we started wanting to answer. And the Tech Founder Challenge was really an absolute jet ski to figure that out. For us, we had set ourselves a success KPI of even if 20 really amazing investable startups would have presented to ourselves, we would be super excited. We actually had 121. We needed to close the platform because we were overwhelmed by the number of startups applying. Co-founded women startups, solo women founders, which is, I think, so much more meaningful. But that was for us the first big proof case of investable women-led businesses are there. And as you know, the research suggests that 35% ROI is what is delivered by women-led businesses than men-led businesses. So it's really just to understand first the business case, are they out there? And now to really understand how can we get that cohort in front of investors. So that was the first step for us.
Well, hi, this is Ritu stepping in. All these applications and more that you had asked for that you received across 22 cities and these 14 sectors, what really stood out for you the most about this cohort of women founders? Because the winners span, across all of these emotion AI, digital health, climate tech, and so on. What does it say about the next frontier for women-led innovation in India?
So, Shruti, first of all, it busted myths for us. Our anticipation, and I'm really embarrassed to say this also for myself, is that, a lot of the startups would be in the consumer space or linked to women products or beauty or apparel, or there would be some sort of, e-commerce platforms. But we were absolutely blown away by the number of AI startups in the top 20 that were selected from the 121. How many of them are actually really technical, deep tech businesses? This was also very, very interesting for us to note. And it was a myth buster for everybody. What it means is that there is somewhere this funding gap, and we need to figure out what we need to shift. Is it I think it's less than 15% of women are in the VC ecosystem writing the checks. So is that the issue that we need to tackle? Do we need to bring, just like building inclusive teams, you need to have a very diverse board of people who are recruiting. Do we also have need to build in very considered, very consciously, a diverse board of VC check writers? So that was one of the key insights that we were thinking of, okay, that's the next step we need to do. The other question is, what do we need to do for this cohort that we pulled together? It's not a small cohort, 121 really, really great deep tech businesses. How do we get them in front of the investor community in India and globally? What was also very interesting for us to learn is that...
Got that, Prajna.
Yes?
Well, Prajna, since we're running out of time, I have to stop you there. But thank you so much for joining us here. It's been a pleasure hearing you, and we wish you the best with this event. And we're going to move on now to what else? Well, it's not just billboards and TV ads, but what's selling today is what your favorite creator says is good to buy, and e-commerce platforms want to leverage that to drive orders. From Flipkart to Amazon, Myntra, e-commerce giants are actively betting on content creators to turn that trust into transactions through live commerce. Shilpa Ranipeta dives into how content and commerce are merging one live stream at a time.
Your next shopping spree might not start with an ad, but with a live stream. And the person convincing you to buy that serum or lipstick might not be a celebrity or a dermatologist, but your favorite creator on Instagram. Well, this may look like a YouTube set, but it's not. It's actually a mini shopping studio, because platforms like Flipkart are betting that the future of e-commerce is not just in search bars and filters, but in short videos, live streams, and in that creator that will convince you what to buy and why. Betting on this fast-growing format, Flipkart is creating Creator Cities, 18,000 square feet of production space, which gives creators the infrastructure they need to create content, which will in turn help Flipkart sell on its platform.
Content commerce is starting to go up quite a bit, and we definitely want to catch this wave. And we want to address it in three parts. One is we want to provide infrastructure and capability, like a studio, capability of live streaming, etc., for creators to come, enjoy, and get started. Video is now becoming ubiquitous in Flipkart, right? So what you will see is video showing up in every part of the buyer funnel. And now the brands will be very excited. So we want to create an ecosystem where brands enjoy, the funnel, the buyer enjoys, as well as content creators enjoy.
Globally, live commerce is already over $100 billion industry, with China leading the way. In India, it's still early days, but Flipkart, Amazon, Myntra, and even Meesho are all experimenting with formats where creators demo products, answer questions, and close the sale live. Driving this is the Gen Z and how they shop. For the Gen Z, shopping is no longer about the ratings or the reviews. It is about relatability. And who are they relating to? It is these influencers and creators. And they are the new storefronts. And now online marketplaces are handing over the tools and the space for them to sell right from their own creator studios.
Earlier, one voice was enough for a user, right? They related to these larger than life celebrities. But people have now started moving to relate to individuals. Correct. And who I relate to is very different from who you relate to. Hence, it is very important to talk the language of this Gen Z, and who better to talk this language is this influencer ecosystem.
So how big is this live video commerce bet for Flipkart?
The bet is very big. Today, it's not very large for us, but we do believe that the next set of customers, the next set of relevant customers will come by selling through this format called video. I think getting influencers to do that is also helping us, which is why you see a lot of creator-led stuff that we are doing.
From reels to reality, creators are no longer just influencers. They are the new age salespeople on the internet. And with online marketplaces handing the mic and the marketplace over to them, the future of online shopping might just look like this, where you love it, you view it, and then you shop it, and it's all live. In Mumbai, Shilpa Ranipeta.
Well, with that, it's a wrap from Ritu and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side.
I can hear you. How much time will we begin in? Okay.